Ladies and gentlemen, good day and welcome to the Vardhman Textiles Q1 FY22 post-results conference call hosted by Batlivala & Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Prerna Jhunjhunwala from Batlivala & Karani Securities India Private Limited. Thank you and over to you, ma'am.
Thank you, Lizanne. Good evening, everyone. On behalf of B&K Securities, I would like to welcome you all for 1Q FY22 post-result conference call of Vardhman Textiles Ltd. Today we have with us the senior management including Mr. Neeraj Jain, Joint Managing Director, Mr. Sushil Jam, Director Raw Materials, Mr. Rajiv Thapar, the Chief Financial Officer, Mr. Mukesh Bansal, Senior Vice President Fabric Marketing, and Mr. Akshay Jain, Head of Finance. I would now like to hand over the call to Mr. Akshay Jain for initial comments and post which he will transfer the call to Mr. Neeraj Jain and then we can open the floor for question and answers. Thank you and over to you, Akshay.
Hi, good afternoon to all. Just to provide some salient features of our quarterly results, our standalone top line was 1917 crores and an EBITDA of almost 500 crores. Which translates to a margin of roughly 26%. Comparing this number YOY would not be of any great use since this was the COVID-affected quarter last year. But comparing it sequentially, our top line is approximately higher by 3%, EBITDA is higher by 23%, and PAT by 35%. For further drill down and reasons behind these numbers, I hand over to Mr. Neeraj Jain.
Good afternoon, everyone. This has been a quite interesting, challenging quarter. We started the quarter with a positive note, and in between the very strong second wave came in, COVID-19 in India and many other parts of the world, especially India. So the business was again a little bit in a difficult situation, but then I think by the end of the quarter, things started improving again. The demand of yarn continues to be good from the export market. We have been discussing, we have been mentioning that the effect of China plus one expectation of most of the brands, I think that still continues, and they're looking at more suppliers, more vendors for their produce. In between, we understand the US Senate is also passed a bill that nothing grown in Xinjiang area or produced in Xinjiang area would be allowed in USA. And I think to that extent, people are looking at diversification of the vendor base, where India also gets a chance to supply the material to them. During the quarter, the demand of yarn was good internationally from China, Bangladesh, and other parts of the world. And as a result of that, though we had a very difficult time in India in terms of second wave, at the same time, and lots of states in India were almost stopped or closed down. There were lots of restrictions in the country, and the sentiment was very much down. But at the same time, because the export demand was good, we could sell the products in the export market and continue to produce at the full efficiency. And the impact to that extent on the margins did not come. Rather, we kept on working in the same fashion which we were. Having said that, I think after May 6, 7, 8, the things started improving and the domestic demand also started improving. So because of the COVID, one, there was a fear factor in the mind of people. Two, lots of money gets blocked in the system by way of a working capital cycle for government or for retailers because the shops are closed. So they were also stuck up, which is now all these things have started releasing slowly and things are definitely better in India also. The domestic demand, as per our estimates, had come down to almost 25-30% of what it used to be in the month of April. but I think now slowly started reaching 70, 80, 90% as things are improving, as things are becoming normal. The money cycle has started improving. I'll not say it's 100% okay, but yes, definitely far better than what it used to be. So both domestic demand and export demand, the overall demand of yarn continues to be good. At the same time, there has been a push of raw material prices also. The raw cotton prices internationally are touching almost 90-91 US cents per pound. The domestic market is also increasing. Rather, the increase in domestic is higher compared to the US, and it is now touching almost 95 cents in India. Most of the stock which was being carried by PCI, I think they are exhausting most of the stock. And as a result of that, because most of the spinners were willing to buy at even these prices, the margin was okay for them. And as a result of that, there is no spike in the cotton prices. And with the 95 cents also, I think the demand is good. And now, once the PCI stocks are over, we have to look at how the prices of cotton behave both in international market as well as domestic market. This has been the period where all these brands which are coming in, all the demand which is coming from Bangladesh, all the demand which is coming from China also, because China is very strong in the garment exports. So since the European or the US-based people have started asking nothing to use in the Hindu area, so probably it looks like that they are more interested in importing the yarn from India and other countries, converting into the fabric garmenting, and then exporting to the USA or to the Western world. It looks like that. To the demand, most of the Bangladeshi mills are running at full capacity. There are lots of orders they have from US and Europe, and they were requiring more yarn. So the demand of yarn has been very, very good from Bangladesh also. And as a result of that, the export normally, which is in the range of about 100 million kg per month from India, started touching almost 125, 130 million kg also in this period. As a result of that, there was, in spite of a very strong wave of COVID, the pressure was not felt in the same fashion, which otherwise would have been a very, very difficult time for the Indian spinners. All these indications looks like that the pent-up demand or the increased demand, or as the markets are opening, more and more shopping is happening in USA. The USA, I understand, is growing by almost 14 to 15% on a base of 2019. 2020 we are not talking of, which means most of the stores the inventories are very less. Their sale to inventory ratios are one of the lowest, which they want to improve or they want to increase. As a result of that, because of the pent-up demand or because of the increased demand, I think the garmenting business continues to be quite good in USA, which is giving a pressure to most of the other countries for the supply of textile materials. This is about the spinning business. I'll request Mukesh to give some brief on the fabric, and then we can start the QA session, and the other queries we can resort to at that stage. Mukesh, over to you.
Thank you, Neeraj. Good day, everyone. For the fabric business, last couple of quarters have been a big roller coaster. Quarter in, quarter out, we have been, sometimes there are peaks, sometimes there are valleys. Last year, Q4, we almost recovered from pandemic and we were near the full capacity utilization, but then we got hit by the second wave of pandemic starting from April, somewhat in the last week of March. Major retail markets in India were shut down. People were not moving out and the shops were also closed. Even today, when we are talking, 100% of India is still not open. Some parts, like in Maharashtra, some down south, the big malls and large shops are still not allowed to open, and somewhere there are weekend lockdowns. As a result, India retail is still struggling. Similarly, during the first quarter, due to lockdown in Karnataka, Tamil Nadu, the garment exporters, garment factories were not allowed to operate at 100% capacity. As a result, the garment export out of India was also impacted. Same was our fabric supplies. But now the situation seems to be improving, particularly from the US. As Neeraj mentioned, there is pent-up demand. We also have sufficient orders. So sequentially, we are seeing quarter two to be better than Q1 as far as capacity utilization is concerned. The raw material prices, as our raw material is yarn, and the yarn prices have seen a good rise because of the demand and also because of the cotton prices. So there's some slack always remains between absorption of the full price increase into the fabrics. But we are on track, and then sequentially we are improving our price increase absorption. So that's it from fabric side, Neeraj.
That could be answered along with all the questions.
Should we open up for questions?
Yes, please.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Anil Kumar Sharma, an investor. Please go ahead.
Good afternoon, sir, and congrats for the great numbers. I have 2 questions. Number 1, what is the raw material stock position as of now? And what is the margins? Cotton prices have increased. We have how much cotton stock we are having at presently?
The cotton season starts in the month of October and goes up to March. So most of the mills would try to cover so that they can meet the next cotton season. So generally we don't share the exact date by which date we have the stock, but most of the till for the current cotton season we have sufficient stock.
Right, sir. Sir, one more question. Fabric sales are less than compared to the previous quarter, as told by the third person. Present capacity utilization, can we see what is the present capacity utilization of fabric?
Presently, we are at 85%.
Okay. All right, sir. Thanks, and wishing you a very best number. Thanks for the great number. Thank you.
Thank you. The next question is from the line of Saurabh Patwa from HDFC Mutual Fund. Please go ahead. Saurabh, your line is in the talk mode. Please go ahead.
Yeah. Can you hear me, sir?
Yes.
Go ahead, Saurabh.
Yeah. So, congratulations for the great set of numbers, sir. Just wanted to understand more on, as you highlighted in the opening comments, that the part of Chinese demand is led by the ban of cotton grown in the Xinjiang region. So, how do you see, sir, things panning out maybe for 1 year from now? Do you believe that because there is a strong Chinese internal demand also for the April, so do you believe that over this maybe over a period of 1 year or so, Chinese garmenting companies will be able to divert the local demand, meet the local demand from the cotton grown in China, and for the export they will continue to buy yarn or cotton outside China?
Possible. That's possible because out of the total cotton they consume, almost 50% comes from Xinjiang, which is a very big number. So I think there are two kind of, in my view, there are two different set of companies. One is which are purely based out of for the exports. I think for them, they will have to import more and more yarn in case they want a good certification that they are not using any Xinjiang cotton. But the other companies which are either domestic based or the companies which are mixed, they might look at sourcing from the local market also. Second, the raw cotton prices in China are much higher than Indian prices. So the government of China, they are doing an auction every day, close to about 9,500 tons per day, and the average for last almost now 2 weeks, and the average realization per day is not less than 110 cents per pound. So if we go by that cotton, I think to that extent it is going to be much more expensive for the local yarn, even for the local market also, and that's where some advantage may continue to be there for Indian market.
Okay. So in that case, it is quite possible the current spread, which is higher, which is materially higher than long-term spread in terms of yarn, may continue.
Possible. So I'll not say. I mean, the current margins which are available, that may not continue, but yes, the margins which are normally available, the medium-term margins could be higher than that.
Great, sir. Great. Congratulations. Thanks, sir, for your taking the question, and all the best, sir.
Thank you. The next question is from the line of Alpesh Thakkar from Antique Stock Broking. Please go ahead.
Thank you for the opportunity, and a very good set of congratulations for a very good set of numbers. Sir, part of my question has been answered. Just a follow-up on that. So, are we seeing any increased demand from Chinese garment or fabric manufacturers for our yarn from imported from India or something like that because of the Xinjiang issue?
Yeah, definitely the demand from China is good as of now, and it's increased only from the previous period.
Okay. And how much would be our exposure to the Chinese currently, like to the China exports in terms of yarn?
India as a country, we export close to about 35% to China.
Okay.
Yeah.
Got it. Yeah. Thank you. That's it from my side.
Thank you. The next question is from the line of Abhishek Jhunjhunwala from Can Capital. Please go ahead.
I wanted to. Can you hear me, please?
Yeah. Yes.
Yeah. To understand, means are we also dealing in home linens like bed sheets and all, the fine yarns and all we make?
Yeah, we produce whatever yarns could be required, even for the fine counts, etc., depending upon the margin or our capacity. But yes, capability-wise, we produce that as well.
So you are manufacturing the bed sheets and all, bed linens and all?
Only spinning. So we have our weaving is the narrow bed, which is the apparel fabric only, but we can produce yarn for the wider bed.
Okay. Thank you.
Thank you. The next question is from the line of Nirmal Shah from Seraphic Management. Please go ahead.
Yeah. Good evening, sir. Basically, my question was with respect to demand supply of yarn. As I understand, the NTC mills of Government of India, they actually stopped functioning right from the first wave of lockdown. So has it any role to play with respect to the better demand supply for yarn in India?
Not really, because the total capacity is close to about 1 million spindles or so. And for the last 6 months, they have been running close to about 35-40% capacity. So all the mills which were modernized, they are all running for last 6 months. So I think already 400,000 spindles are working, and it's only about another 600,000 spindles, which indeed, if I go by the overall capacity in India, which is close to about 45 million spindles, this 600,000 is only 1.5% of the total capacity. So I don't think that is sole factor, or is there any major role to play in because of that.
And sir, just a last question. Because of the current buoyancy in the yarn prices, do you see a substantial capex now coming back in the sector?
There are two kind of capex which could come in. One is the pure expansion, the new expansion, which in my view may not be really substantial. But at the same time, I think since the spinning mills have earned good money during this period, So my very strong belief is that lots of modernizations would happen, and the capex will happen primarily on the modernization side, where all the mills who were really starved of money for the last many years may get some liquidity available to them, and then they may try to modernize the mills. But pure greenfield projects or the new expansion, that may really not be a very big number compared to the capacities we have.
Okay. Thanks a lot.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Jeetu Punjabi from EM Capital Advisors. Please go ahead.
Hi. Thanks so much. Thanks so much for making this presentation. Now, I've got 3 questions, right? One, can you, I know that you were asked earlier on sustainability of margins and the fact that the margins may not sustain at these high levels, but will probably settle higher than levels. Now, if you were just to calibrate that in terms of numbers, do you think what a 20-23% EBITDA is sustainable over the next 12 to 18 months, or how would you think of it in numbers terms? What do you think is sustainable over an 18-month period?
Normally, our guidance number has always been between 18 to 22%, good at the bad times. Both last 1-2 years were much more difficult. So I believe north of that could be possible.
North of that will be possible. Okay. Second question is in terms of volumes, right? So you alluded to U.S. demand, and you also talked about the aggregate export demand being good. And let's say last few quarters you're running at about just under 2,000 crores a quarter of revenues. Can go up over the next 2 months? Can this go up by 25-30% over 18 months?
Sorry to interrupt, Mr. Punjabi. Sir, your voice is breaking up.
Sorry, is this clear?
Much better. Thank you.
Okay, my apologies. So my question, running just under 2,000 crores a quarter of top line, question is, what is the ability to scale this up? Can it go up 20-25% over the next 12 to 18 months?
On the spinning side, we are running almost full capacity utilization. We are putting up some new expansion plans, but they'll be partially available by March, April only. And from March to May, we are adding about 8-9% of our capacity, which would be available maybe 8 months down the line only. On the fabric side, our capacity utilization has been much less, and I'm sure as we'll be scaling it up, I'm saying against the quarter, as we'll be scaling it up, I'm sure there would be some scope. But to that extent, the yarn would be internally supplied to them. So the top line may not really improve or increase substantially or proportionally to the fabric sale, because some internal sale of yarn will happen to them. But yes, the margin can improve in case the fabric business utilization improves.
Okay. The third question is there a way internally to reduce cyclicality of the business, either through long-term contracts or moving a value-added basket of portfolio? Obviously, these are longer-term things, but is there a way to reduce cyclicality in the business by doing certain things? And how do you think about that from a medium-term perspective?
In terms of the yarn or the fabric context, I think most of the business happens on a month-to-month basis, whereas some of the brands may talk of a season or a 6-month period. So depending upon the customer requirement, to that extent, we keep on working with them, and we are willing to look at even the long-term contract. But I think more of a customer choice, because normally customer will not buy beyond a particular season. So to that extent, this risk would always be there. Second risk, which generally we feel is the risk of raw materials, because we have to buy most of the raw materials in the season, and the off-season the prices could be very different. So this year has been very, very good, where we were fortunate that we covered cotton at a much lower prices, where prices are very high, but it could have been other way around as well. So my belief is no way as of now we can cover the cyclical risk of Indian cotton, because the only way we can hedge is through the New York future, and many times the Indian market or the New York future, there could not be the direct or a perfect correlation to that extent. So whenever we feel we require to hedge, we try to do it in that fashion. But frankly, the volume in the NCDX, etc., really minuscule, that doesn't give any purpose to any mill here to cover ourselves. So frankly, both in terms of raw cotton and also in terms of the customer relations, we are open. But I think no customer, no brand is willing to commit more than 3 to 6 months. As I'm talking about the best case scenario. Otherwise, all trade-based business happens on a month-to-month basis.
Okay. And the last question, if I may ask, is that, there's obviously a fair amount of cash generation in the current cycle because of the last threats, and you're already a net cash balance sheet. Is there an intent to increase the payout through dividends or buyback or whatever to enhance shareholder value through that?
Deepak, frankly, this will be when we're putting up all these cash flows, everything to the board, maybe towards the end of the year, and it's up to their judgment what they intend to look at after that.
But articulated thinking that a certain payout ratio, 30, 35, 40%, whatever number there is, would be desired board or whatever. Is there something that's been articulated or thought about clearly?
No, sure. I mean, we discuss it with the board based upon our thought process and the requirement of cash. But eventually, it's their judgment call. How do they want to look at that?
Okay. And if I can ask one last question, I mean, just from a senior management and board prioritization perspective, what are the one or two most critical things that the company is focusing on over the next 18 to 24 months?
If the opportunity comes to India in terms of all these brands, touching to India, so our priority has to be looked at that the kind of differentiated products they require, the kind of service or the delivery they require, whether we can really be in a position to sustain that. Till now, we have been doing it quite well. But I think more and more business coming from the brand, the requirement, the long sizes or the immediate changeovers in the quality of the service or the sustainable quality required, sustenance of all the quality required would be the one big priority which we have to look at. So we also have to continuously look at that how do we sustain, support the technical system also. So both in terms of modernization, in terms of upgrading, or in terms of the digitalization, what more, there are lots of solutions now which have started coming to the market. So how do we engage ourselves and start learning to those processes? Third, in any case, in the Indian context, is one of the biggest challenges on the manpower productivity, the availability of labor and attrition. So we have to look at really how do we handle that, and if it's not working well, then whether we look at some kind of automation, or how do we look at our availability of manpower to sustain the operations in an efficient way.
Okay, excellent. Thank you, sir, and best wishes.
Thank you. The next question is from the line of Prerna Jhunjhunwala. Please go ahead.
Thank you, Lizanne. So I had two questions on macro perspective. So I wanted to understand we understand the yarn business dynamics that currently it is in short supply, etc. But now considering that, the US retailers looking for China plus one strategy, and they eventually may look for sourcing from other countries than China, and even their current vendors like Bangladesh, Vietnam might be forced to source from countries other than China. There are no major viable options in our opinion apart from India to a very large extent. So in light of increasing opportunity in the export market and taking into account the incremental capacities that will come in to cater to the export market in our own country as well, when we are talking about home textiles or garment, do you think that there will be an incremental requirement for apparel fabric in general going forward, and could you just explain us what is the demand-supply dynamics in the fabric business considering this environment, and what kind of investments India or Vardhman will be ready to take to leverage on this opportunity?
Surely, if we look at the growth model of any country, as the country has progressed, as the GDP is improving, as the per capita income is improving, the fiber consumption will keep on increasing in various parts of the world. India, the fiber consumption is still about 3.5-4 kg only, whereas the world average is much higher, and the Europe, China, USA is definitely is much higher compared to India. So our belief is that definitely the demand of fiber would improve in India and the consumption of fabric would improve in India. Having said that, that's why the last leg of fabric expansion was taken in India, which was just before COVID. Unfortunately, we were caught in the COVID situation and we had to suffer almost for 2 years because all offices, everything was closed and we could not utilize our capacity. Having said that, we believe that apparel fabric demand would be good in the medium term in the times to come, and definitely both export and the domestic market, and there is a need for the better fabric requirements. More and more retail is retailing is becoming organized. People are moving towards more and more ready-made garments from the tailoring, which will definitely require a better quality or a good quality fabric for all the brands. So this was one of the reasons, as I mentioned, for the expansion, and we have a very strong belief that in the times to come, we would be in a position to utilize all our capacity. So that's on the overall company strategy that we should try to, and this will give some natural sustainability also, which was asked by Mr. Deepak before, that in case our fabric product mix improves in the overall sales, that will give us an advantage. Two, in terms of our yarn supply situation, I think since we have already planned for the same, and even with the full capacity of fabric utilization, we'll be requiring close to about 37-38% yarn total with whatever is we are producing. So quite comfortable with that, and about 62, 63, 65% will keep on exporting or in the domestic market.
Okay. And so what about the demand supply in the fabric business? Largely, like as a country, do you think we are still having enough capacity to grab the medium-term opportunity, or we will have to really expand in the fabric business, because there is less data available in the market about woven fabric per se, like fabric requirements?
Mukesh, would you like to answer that?
Especially with respect to even finished fabrics, where India is considered to be weak, and there are very few large players in the organized space at a very large scale. It could be a huge opportunity due to a strong recall when large requirements of fabrics are created by Bangladesh, Vietnam, and other countries' importers.
Yeah, Mukesh, would you like to answer this?
Yeah, India has capacity. A couple of plants were not doing as well last couple of years, so the capacity is not fully utilized. For the immediate term, as the demand is coming up, those process houses, if managed well, the throughput can definitely be increased, and in the medium to long term, India would require fresh investment. So as far as Vardhman goes, we have expanded our capacity last 2 years. Unfortunately, we got hit by pandemic, and we are on track to increase the capacity utilization in next quarters.
Okay. Thank you. And one more question on my end on different types of solutions required, because when we talk to various garmenters, they are saying that the kind of garment that India is producing is largely different than the kind of opportunity that is coming up. Are you finding any opportunity in terms of fabric apart from the current product solutions, also on sustainability kind of products like recycled products or something like that that is coming up in more demand?
Yeah, you see, one aspect to this is the fashion is cyclic. So there will always be new products coming in the market and the demand suddenly picks up. Everybody wants something new that has come into the market, but then you will never find enough capacity to feed that, whether it is India or elsewhere in the world. But the thing is that how quickly you can adapt to the latest requirement. Now the latest demand is for the sustainability products. So on the sustainability, as far as the raw material goes, India is well equipped, whether it is the production of BCI cotton or organic cotton or the sustainable viscose products or the recycled polyester. So India is well equipped, and as far as the manufacturing of yarn or the fabric is concerned, there is not much of complexity in order to handle these products. So depending upon what garmenters you are talking and what opportunities they may have, India had been predominantly more strong in the cotton and cotton blends. So if somebody requires 100% synthetic or polyester, nylons, or some kind of exotic blends, India may not be as strong today as compared to China. But if the demand for such products continues, then certainly India will also build up the capacity because we already have a raw material base. That is not a challenge.
And can Vardhman look at such opportunities going forward?
Certainly, we are always looking for, there is no constraint as far as the exploration of opportunity is concerned. The board will take appropriate decisions when required.
Okay. Thank you, sir. That answers my queries on the macro front. Thank you so much.
Thank you. Thank you.
Thank you. The next question is from the line of Abhilasha Satale from Dalal & Broacha Stock Broking. Please go ahead. Sorry to interrupt, Abhilasha. We are not able to hear you.
Is it?
I'm so sorry, sir. Your voice is breaking up. As we are unable to hear the current participant, we'll move on to the next question. That is from the line of Naushad Chaudhary from Systematic Shares. Please go ahead.
Hi, thanks for the opportunity and congrats on a good set of numbers, sir. On industry side, sir, I just wanted to understand, apart from China incentives, visibility, and FTA, is there anything else in terms of doing business has changed over past few years which we are missing and you would like to share with us?
Not really.
Perfect. In terms of cost of debt to our business, how it was 2 years back versus now, considering all the incentives if we receive any?
So, as far as the cost of debt is concerned, we have the rate cuts that have been the lower interest rates that have prevailed over the last 2 years have helped us. Maybe not in a 1:1 ratio simply because most of our debt is subsidized by the top subsidy. But it has been, we can say maybe 50 to 60% of the lower interest rates have accrued to our balance sheet as well.
In last 2 years?
Yes.
Okay. In terms of ROC, apart from increasing your utilization, is there any other way or area you see any scope for improvement and we can work on it to improve our ROC as well?
Sir, so since we are operating at almost full utilization in both of our businesses, ROC can improve due to higher utilization as you correctly pointed out, but also due to increasing prices. Since most of our raw materials, for the time being, at least for the till the end of Q2 and slightly beyond, till the next quarter season, we already have our raw material purchased. So increasing prices of our finished goods will obviously add to our return on capital. But on a sustainable or a medium-term perspective, there is nothing that we can add that will enhance ROC.
Sir, if you can, quantify your cost of debt in terms of percentage so that we can, in that context, we can understand at what level of ROC we will be, happy and make money. So if you can connect both these things, your cost of debt plus.
So if you look at our numbers in FY21 or even this year, our long-term cost of debt should be in the range of 4%. Plus minus.
Perfect. Lastly, in terms of our pricing model, especially in both the businesses in yarn and fabric, do we largely work on spot price basis, or is there any mix of spot and contractual in yarn and fabric both?
So as I mentioned, most of the business happens on a 1 to 2 month basis, except a couple of brands where it could be, depending upon the customer requirement, 3 to 6 months.
Okay. One last question in terms of cost of spinning, which I believe currently is around 45 to 50,000 per spindle. How this cost was 5 years back and 10 years back, sir?
40 to 50,000.
What is the cost per spindle today versus 5 years back?
The today's cost will be close to about 75,000 rupees a spindle. It used to be about 45,000 rupees for 4 or 5 years back.
This is for both knitted and weaving, both range would be similar?
Yeah, for knitting yarn or weaving yarn, it's almost same because most of the spinning, even for knitting, is along with the compaction as of now.
Okay. Thank you so much.
Yeah.
Thank you. The next question is from the line of Abhilasha Satale from Dalal & Broacha Stock Broking. Please go ahead.
Yeah, thank you. Now am I audible? Is it clear?
Yes,
hello.
Go ahead.
Yeah. Okay. Yeah, sure. Sir, I just wanted to know that how the spreads have moved. Like if you could just give us a sense, last year in the same quarter and in the previous quarter, how it has moved on a quarter-on-quarter basis and year-on-year basis, just, yarn and cotton prices, if you could just tell us the average. Hello?
Hi. So obviously, YOY spreads are not really comparable. Last quarter, we saw spreads of maybe 75 to 80 cents between the spot cotton and spot yarn prices. But current quarter, they are close to the $1.50, $1.40 average. Sequentially, last quarter, it is similar, maybe higher or lower by about 5 cents on an average.
Okay. So Q4 FY21, it was in the range of 70 to 80 cents per kg.
Quarter 1 FY21, which was the COVID quarter of
Yeah.
April to June 20.
Okay. Yeah.
It was in 75 to 80 cents. But quarter 4 and quarter 1 of FY22, they are similar to the tune of between 140 and 150 cents.
Okay. And sir, what have been the highest spreads we have enjoyed? I think in the year of say 14, 15, the spreads had moved up to around $1.8 to $2 per kg also. So do we see, that that scenario happening in the current situation as the Xinjiang cotton is really it is banned in the international market, and demand scenario is also good?
So on a sustainable basis or on any periodic basis, we have never seen $1.82 kind of a spread available. Yes, for a small period of time it's available, it could be, but generally the spread available as of now would be one of the highest spreads in last many years.
Okay. Yeah, and on a year-on-year basis, how much is a cotton price increase?
The cotton last year before pandemic in the month of February, March was close to about 44,000 rupees a candy. It came down to during pandemic almost 34,000 and then slowly started again going up. So as of now the cotton prices are almost 56,000 rupees a candy.
Yeah. Okay. Thank you.
From 44,000 to 34 to 56,000. So there's been almost 60-70% increase from the lowest level to the today's prices in last 7 months time.
Yes. Okay, sir. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Alpesh Thakkar from Antique Stock Broking. Please go ahead.
Thank you for the follow-up, sir. Just an industry perspective question. So in the polyester also, we have a fairly good raw material base with being the second largest producer in the world. But we are still not as strong as we are in cotton as a country in the synthetics. So what I just want to understand, what is the missing link there and what are few of the challenges? Is it on the capability side or the government support side? Just want to understand that. Thank you.
My belief is, as far as the spinning is concerned, the spinning system remains same whether you produce cotton yarn or you produce polyester cotton yarn. So having said that, and second thought is, in case we are competitive in the cotton exports, why are we not competitive in the polyester or polyester cotton?
Right.
So our thought process or our feeling is, or the industry feels, that the polyester prices in India are higher because they are generally benchmarked as per the landed cost of polyester, whereas the cotton prices generally will be lower 2-3 cents, whereas the polyester will be higher. So our biggest competition in the polyester cotton yarn is either from Vietnam or from Indonesia, where they have a huge capacity of polyester internally also. And I think that's the only reason to our mind where we are not competitive.
Okay.
Of late, there's lots of good demand of polyester cotton also from India, and unfortunately the numbers are not separately available. But I'm sure going by the current export of polyester cotton, there's a good amount of yarn which is getting exported on the polyester cotton also, as there's the overall requirement of yarn in the various world markets.
Okay. Fair enough. Thanks a lot, sir. Yeah.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Akhil Kaluri from Franklin Templeton. Please go ahead.
Thanks for the opportunity. Sir, a couple of questions from my side. First on again what's happening in China at this particular point in time. You did indicate that there is a possibility that there will be a lot of demand for Indian yarn because of which the spreads can remain high. But given that the entire issue is around cotton, how are you thinking about the competitiveness of domestic cotton vis-a-vis international prices? Is there a possibility that demand for Indian cotton will also go up materially, because of which the domestic cotton prices could rise a bit more going forward? Just wanted to understand your thoughts on that.
Yeah, Indian cotton already lots of exports are happening, and we understand this year the export could be as good as 7 million bales, though the prices are very high of the Indian market. So there are a couple of markets like Bangladesh, they keep on buying almost 2.5 lakh, 3 lakh bales every month irrespective of the price. But at the same time now, the Pakistan is not in a position to buy the Indian cotton because of the issues they had with there's no trade allowed between the two countries. China is another buyer which they'll keep on buying some Indian cotton. But considering the overall requirement, I think the generally the Indian cotton export will happen 3 to 4 cents lower than the 3 to 4 cents if we get the higher prices than the domestic market. There are times when the total gap between US cotton and Indian cotton today is about 11 cents, 10 cents. So the moment this gap starts shrinking, I think people start preferring Australian or the US cotton. But till the time Indian price gap is almost 12 cents, 15 cents lower than the US cotton landed cost, then the export of Indian cotton will happen. So probably that benchmark or that extra advantage will be available to Indians between about 4 to 5 cents over and above the normal spread of 5 cents for Indian cotton. If prices go below that for Indian cotton, the cotton will start getting exported much faster.
Sure, sir. But specifically from China as well, right? Because we understand there will be a lot of Chinese spinners who would currently be depending on Chinese cotton. But with whatever is happening with in China at this particular point in time, the way the demand for yarn imports is going up, do you see a possibility that China will start probably importing a lot of cotton as well going forward?
I request Mr. Sushil Jhanhoda, Director Raw Material, to give you specific answers on this.
Sure.
As far as China is concerned, this year China has been the biggest importer of Indian cotton. They have imported around 2.3 million bales from India. Because Indian cotton was very cheap, it was cheapest in the world. At the moment, yes, the prices of Indian cotton has gone up. Therefore, the demand from China at the moment is not there, but Bangladesh, as he usually said, is buying, importing Indian cotton.
Sure. Thanks for this. The other question was around the capex, and you did indicate that you see a possibility of a lot of modernization happening in India. The question that I had was, would you have any estimate of how much incremental production can we churn out from India, incremental production of yarn because of these modernizations that can happen? I mean, what kind of capacities are currently operating at suboptimal utilizations? Any indication you might have on those numbers?
Very difficult to say because modernization may not be improvement only in the production system, but it may be because of the labor availability. People are going in for the auto doctor because labor are not available. So it's not only the increase in the production, but it may be more because of the utility cost or the availability of people. So generally, because if you have to modernize the entire system, then you require a preparatory also, ring fence also. Those kind of modernization generally will not be viable. So I think your people will go in for the modernization on a section by section basis, starting with the availability of people. Ring fence are the first one to get modernized. And to that extent, the productivity may not increase more than 5-7% for those mills who are doing this.
Sure. Great. Thank you. Thanks for this.
Thank you. The next question is on the line of Abhishek Jhunjhunwala from Can Capital. Please go ahead.
Sir, I wanted to ask, how are we proceeding with the garmenting business segment? Are we going ahead with an expansion, or we are on a wait and watch mode?
We are still looking at how to sustain these operations because this period has been very tough for us also again. Because we produce only the formal shirts, and because of the closure of offices, schools, and everything, we had a very tough time. So I think we still like to wait and watch.
Thank you.
Thank you. Ladies and gentlemen, that is the last question. I now hand the conference over to Mr. Neeraj Jain for his closing comments.
Yeah, so of course the numbers are very good, and as we discussed, there could be a possibility going forward that the margins could be better than the historic margins which were available. But at the same time, after I think November, December, once the new cotton comes in, depending upon the cotton prices, the margin could not be the same what we are looking at today, because today it has an advantage of raw material availability also within it. So in our case specifically, as if our capacity utilization on the fabric, we are in a position to improve. I'm sure the operations would improve for Vardhman Textiles. Because April, May, June was really a tough time for the fabric division, and I think they may take another 1, 2, 3 months to improve their capacity utilization and taking it to 85-90% in the next 2-3 months. And I'm sure going by as the openings are happening, things are improving. There is a very strong possibility to going forward for the same. So one is the margin. Second is, I think all our efforts are to look at how what more modernizations or the equipment are required if we have to cater to the increased demand which is coming from various customers. So all we are gearing up for the same, and all how the quality or how the service level improvement is required, how fast your response is required to cater to all these customers, because these would be pretty large customers, and the requirement of both quality, material, lot size, service could be very, very different. So we are internally engaging all our people to look at how do we prepare ourselves, and I'm sure the things are going in the right direction. Till now we have handled it very, very efficiently, and we'll continue to do the same. So both okay, margins are very good. So, but at the same time, internally we always look at how the organization should continue to be strengthened, how the people should be engaged, so that more and more improvement both in terms of the processes as well as the products could continue to improve. And I'm sure we are working very hard to look at that we take full advantage of the situation or the opportunity which is available. Thanks everyone for being with us, for investing in our company, and I'm sure as management will really work hard to come up to the expectations of all of you. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of Batlivala and Karani Securities, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.